But you do have a base case that at some point this year we're going to go down 20%, that we're going to have a bear market.
You know, our take is we do expect that decline to happen when markets don't respond to good news. So I think we're in a period where we had a bear market already in software, the Mag 7, and in crypto. I think that's already taken out a lot of speculation. So to me, I think our bet would be markets are actually going to lift through the end of the month, that we're going to actually be positive for March and maybe hit 7,300. Later in the year is when we think a bear market might show itself.
A 20% crash is on the table. He thinks markets are going to lift through the end of March. He's calling for the S&P 500 to push towards 7,300 before any major breakdown happens. That's not a small move. That's a significant rally from current levels. And the window he's talking about, it closes before April 1st. So the question for Nvidia holders isn't just, is a crash coming? The real question is, what happens to Nvidia between now and then?
When growth is scarce, people buy growth stocks. The US stock market is a growth index, so it's coming out of the rest of the world back into the US. So
that's the key insight. When the global economy starts looking shaky, money doesn't disappear, it moves. And right now, it's moving toward exactly the kind of stock Nvidia is. Think about what Nvidia actually represents to the market. It's not just a chip company anymore, it's the backbone of the artificial intelligence build-out. Every major tech company, every cloud provider, every government pushing into artificial intelligence infrastructure, they all need what Nvidia makes. That makes it one of the purest growth stories on the entire market. And when investors get nervous about slower growth everywhere else in the world, they don't sell growth stocks. They buy them harder.
Out of the rest of the world back into the US. So I think it's a rotation story.
All right, speaking of growth stocks, tech has been up for debate.
That rotation is already happening, and it's one of the clearest setups Nvidia has seen in months. But here's where it gets really interesting, because the rotation story is only half of it. The other half is what's happening specifically with the software and technology sector right now. Tom Lee made a statement that most people glossed over. He said software has bottomed. Not that it might bottom, not that it could recover, he said it has bottomed. That's a very specific, very confident call from someone who called major market moves before most people saw them coming.
Just the software ETF index has lost 5 multiple points. Now the forward PE is 16 times.
For context, the software sector just went through a brutal repricing. Valuations got cut hard. Companies that were trading at 30, 40, 50 times earnings got dragged down to 16 times. That is a cyclical industry valuation. That's the kind of multiple you'd put on a factory business, not a high growth technology company. And that's exactly why Tom Lee is saying the pain is already priced in. The market already assumed the worst, which means from here any positive surprise creates upside. Now take that framework and apply it directly to Nvidia. Nvidia already pulled back significantly from its highs. The stock absorbed a wave of selling pressure tied to concerns about artificial intelligence, spending slowdowns, export, restrictions, and competition from new players. But here's what the market is still underweighting. The actual demand picture hasn't changed. If anything, it's accelerating. Before April 1st, Nvidia is holding its annual developer conference, one of the most anticipated events in the technology calendar. This is where Nvidia typically pulls back the curtain on what's coming next. New chip architectures, new software platforms, new partnerships. These are the moments that remind the market exactly what Nvidia is building toward, and this year, the stakes are higher than ever.
I mean, it's a very confusing time. I think it's very difficult if someone's trying to trade both the headlines or trade oil.
That confusion in the market right now, it's actually creating opportunity, because when headlines are noisy and investors are unsure, the stocks with the clearest long-term story tend to get mispriced, and Nvidia's long-term story has never been clearer. Every single dollar being spent on artificial intelligence infrastructure runs through Nvidia in some way. The training of large language models, the inference workloads that power the products people actually use, the data center build-outs that every major cloud company is racing to complete. Nvidia isn't just a participant in this wave, it's the foundation of it, and yet the stock is trading like the market isn't sure whether to believe it. That gap between the narrative and the price, that's the setup. But here's what we still haven't covered, because the conference and the rotation thesis, that's the surface level. What's actually happening underneath inside the numbers inside the guidance Nvidia is about to give. That's what changes everything for holders, and we're getting to that right now.
Oil's $15 higher than it was last week, but the S&P's higher.
The market is more resilient than the headlines suggest. That's the through line of everything Tom Lee is saying. Yes, there are risks. Yes, a bear market is possible later this year. But the market keeps absorbing bad news and finding a way to hold. And in that environment, the stocks that lead the next leg up are the ones with the most compelling earnings trajectory. Nvidia's next earnings report lands in late February, and the setup going into it is unusually strong. Analysts have been conservative with their estimates, partly because of export restriction concerns, partly because of broader technology sector caution, but channel checks, data center, spending data, and commentary from Nvidia's own customers all point to demand that is running ahead of what the street is modelling. When a stock is underowned, underestimated, and sitting on a confirmed technical support level, that combination historically precedes a significant move. And with the developer conference as a near-term catalyst, the window before April 1st is genuinely important.
That we're going to have a bear market.
Now here's the honest part, because this channel doesn't just tell you what you want to hear. The bear market risk is real. Tom Lee is not dismissing it, he's timing it. His view is that the decline happens when markets stop responding to good news. Right now, markets are still reacting positively to positive data. The moment that changes, when strong earnings get sold, when good economic numbers get ignored, that's the signal he's watching for, and that signal hasn't shown up yet. For Nvidia holders, that means the near-term setup is constructive, but it also means you need to be paying attention, because the same stock that leads the rally into 7,300 on the S&P 500 could also lead the selling when the bear market finally shows itself. High beta works in both directions. The smart play isn't blind optimism, it's understanding the window you're in, a potential final push higher before a more significant reset, and positioning accordingly.
Our take is we do expect that decline to happen.
The decline is coming. Tom Lee is clear on that, but the sequence matters enormously. A rally to 7,300 on the S&P 500 first, with Nvidia as one of the lead horses, followed by a 20% correction, is a completely different experience depending on where you're positioned when each phase begins. Before April 1st, you have a developer conference that could re-rate the stock higher. You have a broader market rotation into growth stocks that directly benefits Nvidia. You have a software sector that one of Wall Street's sharpest minds just called a bottom. And you have a stock that has already absorbed a significant amount of the pessimism the market could throw at it. That is the setup. That is what Nvidia holders need to understand before April 1st. The window is open, but windows close.